we said, we own several assets that are office and retail in nature, and they generally have bigger spaces. So when we get a vacancy, it could be several months before that vacancy is filled. And also, we're not getting any rent for that vacant space, of course. Whereas with a mobile home park, the vacancies are few and far between. And even if there is a vacancy, the dollar amount is fairly small in comparison to the entire park.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Jeff Cook from Cook Properties in New York. Welcome to the show.
Thank you. Appreciate you having me on.
Hey, I'm so excited to have you here today, Jeff. Can you give our listeners just a quick intro as to who it is that they are listening to today?
Yeah, so my name is Jeff Cook. I'm the CEO of Cook Properties. We are a real estate development and management company located here in Rochester, New York. We are pretty much focused on mobile home park ownership and development.
Man, that's fantastic. Jeff, there's 3 questions I ask every guest who comes on the show. Can you very quickly tell us, where did you start, where are you now, and how did you get there?
I started off in apartments in the city of Rochester, and then quickly graduated into more commercial retail office, and then eventually into the mobile home park space. How did I get there? Is that the next one?
It is.
How did I get there? Hard work and persistence. Never give up.
What was it initially that got you into real estate, or was it always something you were involved in really from out of the gate?
I fell into real estate by mistake. I was working for a market research company, and I bought a single family home to live in myself. And I had a couple of roommates. They were going to help pay the rent. They decided after a few months that they didn't like doing what they were doing, so they moved out, and I was left with a big house by myself. So I decided that I wanted to rent it, and so I moved home and started renting it, and it started from there. It went very well, and just started buying more and more apartments. So that's how it started.
Wow.
Yeah.
And at what point in time did you say, hey, wait, I'm actually onto something. Let me just keep doing this?
Yeah, I think it was probably about maybe 2 or 3 years after that point. I had probably, kind of guessing, maybe 50 rentals or so, where I decided, hey, I'm gonna hang up my 9-to-5 job and just focus on the apartments.
Yeah, absolutely. Yeah, 50, especially if you're self-managing, that's a lot. That's a lot of moving.
It was a lot. Yeah.
Yeah. It's a lot of moving pieces. That's a lot of tenants. That's a lot of phone calls. So
Yeah.
Very interesting. So let's talk then about what you guys are doing today, and maybe we can translate some of that into the lessons you've learned along the way. You guys are invested currently in mobile home parks, retail and office, and then also in self-storage. And
Correct.
2 of those 3 asset classes are really hot asset classes right now, self-storage and mobile home parks. Talk to us about why you've invested in the various, we'll start there. Why are you invested in so many different asset classes?
So after I sold my apartments, I really wanted to go more commercial. So I wanted to do retail office, and that was around 2008, 2009. Just because I thought it would be easier. I had a background in apartments, inner city apartments, which were very management intensive. So I was expecting much less management from office and retail, which is generally the case. And then I bought my first mobile home park right around the same time in 2008, 2009, and storage units around the same time also. So we've owned all 4 of those asset classes, for 10, 12 years. And definitely storage and mobile home parks are our favorite ones. They've been the ones that have provided us with the best returns and the best growth. We like mobile home parks better than storage. We're more confident in mobile home parks. We like them better. We're able to grow them better. For us, storage is it's just not our expertise. So we're trying to stay in the mobile home park lane.
Right. Understood. What was it? I mean, 2008, 2009 would have been an interesting time, as is retail and office now, to be involved in that space. So what made it a compelling asset in 08 and 09 to get involved in?
It was really more about the management. To me, it seemed like it would be, much easier to manage, many fewer tenants, and just, more, I just kind of expect them to take better care of things. I mean, to be honest with you, if the internet hadn't exploded the way that it has, coupled with COVID, office retail would still be in vogue right now. But things change.
Right. Yeah, that they absolutely do. And yeah, let's talk about that for a second. How have things changed for you guys in such a way that now you're looking really to divest of those assets and become single asset focused?
Yeah, I mean, just like a lot of other people, we're seeing the great migration, out of a lot of people not working in the office anymore and more working at home. And as Amazon has taken over the retail sector, and the need for brick and mortar space has certainly lessened a little bit. And probably the biggest reason that we are moving out of those spaces is we like the consistency and cash flow that mobile home parks provide. We like we said, we own several assets that are office and retail in nature, and they generally have bigger spaces. So when we get a vacancy, it could be several months before that vacancy is filled. And also, we're not getting any rent for that vacant space, of course. Whereas with a mobile home park, the vacancies are few and far between. And even if there is a vacancy, the dollar amount is fairly small in comparison to the entire park.
Right. And one of the things I've heard about mobile home parks many times is that the tenants are sticky.
They are very sticky.
Yeah, it's tough to relocate. They're
Yep.
they're long-term tenants, typically speaking. I'm excited to jump into the mobile home park space and really pick your brain on that. But I've got a counter argument to the retail and office space. I'd like you to either probably to poke holes in, which is that when things go on sale, right? That's typically what I've heard is the time to buy. And I think we're seeing some of that in the office space, certainly sector, where people are going, all right, look, we're ready just to get out of this and move on to something else. Is now a time to buy, or is this more like the typewriter, being replaced by the computer, where you go, wait, even if it's on sale, it doesn't mean it's a good investment?
Good. Yeah, no, good point. We are seeing a lot of offices being converted to residential, and the retail, a lot of retail being converted to self-storage.
Mm-hmm.
I'm not a super smart guy. I like to stay in my lane and stick with the mobile home parks. I know that there's always going to be a need for housing and for affordable housing. But Sam, to be honest with you, I don't know where office and retail is going to go in the next next 10 years.
Right.
But yeah, if you do subscribe to that philosophy, which a lot of people do, Warren Buffett says buy when people are selling, and I don't know. For us, we do want to sell, some of our assets in the retail office sector. Stick with our mobile home parks. We're super confident in how those are going to play out over in the future. But yeah, I don't know, Sam. What's your take on it?
I don't know either. And that was going to be my next follow-up question was, you guys are in the storage space. We're seeing some of that. We're seeing these giant department stores, being converted, and I have friends who are doing it, being converted into storage facilities. But yet at the same time, I think what you're telling us is that you guys have developed a niche and an expertise in mobile home parks. And it doesn't matter what the variables are in retail, office, or even storage for that matter. You guys know what you're doing in mobile home parks. So why, and you have a predictable runway in that asset class. So why go somewhere else? Is that fair?
You hit the nail right on the head. Yep.
Yeah. So remove risk, remove uncertainty, go to what you know, and then just keep, run that play. That's fantastic. Let's jump into the mobile home park space then. I'm excited really to hear, why you guys found it compelling. What are some challenges maybe you find in that space? Well, before I ask like 7 questions in a row, let's start with those 2. Why do you guys find it compelling, and what are some challenges you have in that space right now?
Yeah, so compelling is, one of the reasons that we really like mobile home parks is, you mentioned it already, is the residents are sticky. They generally do not move. And even if the residents do move, the homes do not, because it is so expensive to move a home and to site it into another park or on private land. There's a national statistic that 98% of mobile homes that are sited in a mobile home park never move. I've been in the business since '08, and I've probably had a half a dozen homes, leave our parks. So,
Wow.
yep.
Wow. That's not many.
It's not many at all. It's not many at all. We've demoed more homes than have been moved out
Right.
to another park.
That was gonna be my next question was, is that in part of that because people just leave it and then you guys have to then demo it? What
It
are
does happen sometimes.
what are some headwinds in the mobile home park space?
Headwinds. Right now it's we're doing okay on supply of homes, but we're not getting as many homes as we would like. Uh, Last year we ordered 200 homes for our park, and right now I think we got about 170 so far. We'll have about 30 trail into 2022.
Hmm.
2022, we have 350 homes on order. I'm not sure exactly how many we're going to get. Probably, I'd be happy if we got somewhere in the low 200s, just because of the supply constraints. We're having some labor constraints also. A lot of the challenges that we're having are not unique to our industry. They're throughout the United States. So it's more hopefully just short-term challenges.
Without asking a softball question, what effect does that have on your business when you guys just can't get the homes delivered on time? Like, what are some downstream effects of that?
Well, it really just it slows our performance. It slows what we want to deliver to investors. We can't hit our targets as soon as we would like to.
Where do people go? Because I'm assuming obviously you guys are having people that are moving into these homes and become paying tenants or owners. Where do they go instead?
So I don't know where they're going outside, and so we're in New York State exclusively right now.
Right.
So we don't have a lot of population growth. So our residents are we're primarily taking them from other housing sources, whether they're downsizing from a single family home, maybe moving out of an inferior apartment complex. So they're staying where they are.
Gotcha.
Yep.
Gotcha. Okay. Okay. Yeah. Cause you guys are bringing new supply online. And when you guys bring those online, are you doing owner finance to the buyer, or are you guys holding those in house as, park owned homes, or what's that look like?
We do a combination. We really have been pushing sales recently. So we use a lot of third party finance companies. We don't do any in-house financing ourselves. And then we also rent a portion of the homes also.
Gotcha. Gotcha. Yeah, I've heard, and again, I don't own anything in the mobile home park space. I've heard, having park owned homes presents its own unique challenges.
It does.
Yeah,
Yeah, it does.
that's really interesting.
We don't mind it. It's a rental. It's primarily newer homes that we rent. So it's not like a lot of maintenance issues. But it does, the ultimate goal of being a mobile home park owner is to just own the dirt and manage the dirt.
Right, right, absolutely. Be a true just the landlord.
Exactly.
That's fascinating, Jeff. How many? I guess do you write this down? I guess pads do you guys own today?
So right now we have 4,200 pads
Wow.
across 42 parks. We have another 2,300 pads under contract that we'll be closing on in end of January, end of February timeframe.
Yeah, and that was gonna be my lead-in question. So you've got 4,200 pads, right now, and you guys are gonna basically 1.5 times size your portfolio in one single transaction. I'd love to use kind of the rest of this show to talk about that transaction, how you guys came across it, just the down and dirty on the deal, because this is, that's a big acquisition.
Yeah, we're super excited about it. We bought it's often one seller who's relatively local to us. Is someone that I've known for many years. We bought a couple of his parks as part of our fund that we just closed in October. We bought those two of the parks back in April, and then the fund closed in October. So we already knew him, and as soon as we closed on those two parks last spring, we approached him and wanted to, we offered to buy the rest of his portfolio. So we were able to go under contract, I think in August or September, and we've just been working through due diligence right now. But yeah, like I said, we're really, really excited. Most of the parks are all within our footprint of what we already own. So we should be able to get a lot of really good management efficiencies, some good scale. Like I said, it's 2,300 pads. and we're hoping, like I said, to close in January, February timeframe.
Yeah, that's fantastic. What are some due diligence? Where do you even begin on due diligence with 2,300 pads? I mean, that's across how many parks is that?
It's 55 parks, which is a little bit of a overstated, I would say, because some of the parks are smaller. It's really more, I would call them more about 40 parks, because
Okay.
some parks are right across the street from each other. They're very close to each other, but 55 separate parcels.
Gotcha. And where do you start with due diligence on that? Can you kind of give us the introduction? I know because an August contract time to a February, it's a 6-month contract to close. I mean, that's a long time, I would think, for most sellers. So
Yeah, no, originally it was supposed to be a 60-30, but we just couldn't get there with that many parks.
yeah,
A lot of
right.
title, a lot of survey, a lot of
Sure.
phase ones, a lot of appraisals.
Right. Yeah, you got a lot of moving parts there
For
on
sure.
that. So can you talk to us about due diligence? How do you guys go about doing that much due diligence on that many parks?
Yeah, so we did it all in house. We just we treat it the same way we would as a single park. We do our you look at utility bills, look at financials. We do our physical site inspections. If they're on private utilities, we will do a well inspection, a septic inspection. Again, just like we would for if it was a single park. We just have to do it 55 times.
Right. Yeah, absolutely. Have there been any surprises or things that you went, oh wait, that's unique. We're going to have to work our way through that?
Surprisingly, no, there hasn't been. The seller is very, very transparent. He's been great on information that we've needed, so there hasn't been any surprises.
Wow, that's
Yeah.
I wouldn't have expected I wouldn't have expected that. I would think across 55 parks you would have found something you went, oh crud, we're going to have to work our way through a
No,
hiccup.
no,
That's fantastic. Tell me,
yeah,
what are some things over the years as you look back through mobile home parks, as you look back through retail and office, self-storage, even, back in the apartment days, what are some things that you feel like have attributed to your success that you think other people should emulate?
like I said earlier, persistence is really important. Don't take no for an answer. Um, hard work, consistent hard work is very important. Um, like we just talked about, due diligence is very important. Um, there's a right price for every piece of property out there. It's just a matter of getting to that right price and making sure you know what you're getting yourself into. Um, but yeah, I think the two biggest things, Sam, are hard work and persistence for me.
Yeah, absolutely. There's no replacements certainly for those things. Here, before we jump into the final 4 questions, Jeff, let's talk quickly about team. I mean, this is a team sport,
Oh
and
yeah.
when you're buying, when you own 4,200 pads and you're adding another 20, what was it, 2,100-ish pads to it, and you got your hands in a lot of other things. Talk to us about your team and how you've successfully built a team.
So we have 55 employees right now. We're going to be taking on another 50 approximately with the acquisition.
Wow.
Um, me and my brother Brian, who's our president, we've been doing this together for about 12, 13 years. I've been in business for about 25 years. It's that same thing about hard work and persistence. We try to just have that go all the way down throughout the organization, and just to try to have a really good culture of hey, we're all going to make mistakes. We all have the same goal in mind. Like you said, it's a team effort, and open door policy. Just get the job done. Let's have some fun along the way, and we always want to do the right thing. We always try to do the right thing. What else? Fix it once. We don't want to go back again. Fix it right the first time. Move on to the next thing. So.
Yeah. Acquiring 50 employees, is there any apprehension with that? I know I've bought business in the past, and I'm on the fence as to whether or not I'll ever buy a business included with employees again. It's like, gosh, I don't know. This is risky. So what are your thoughts there?
Yeah, we certainly have some apprehensions, but with the acquisition, there's a lot of expertise and knowledge that we're gaining. So we are hoping and planning that all the employees come along with the purchase, and give us an opportunity to roll them into our organization.
Right. That's great. Jeff, I've certainly enjoyed our conversation today. Learned a lot from you, just on the especially as it pertains to why you guys are staying in the lane you're in, what you guys have done. You guys are rocking and rolling, and certainly learned a lot from you today. So thank you for that. Let's jump here into the final 4 questions. What is one tool or resource you find you can't live without?
One tool or resource, my team. Absolutely.
I love that. That's
Yep.
great. That's great. I actually haven't had that answer yet. So kudos to you. Good.
Yeah.
Next question for you. If you could help our listeners avoid just one mistake in real estate, what would it be, and how would you avoid it?
One mistake in real estate. Again, due diligence. Do your due diligence. You can't really do too much. Yeah, due diligence.
Got it. When it comes to investing in the world, what's one thing you're doing right now to make the world a better place?
Always invest in yourself first.
Yeah, that's a great one. That's a great one. And if our listeners want to get in touch with you, Jeff, or your company, what is the best way to do that?
Yeah, they can reach me either our website, cookpropertiesny.com, or my email, jeffcook@cookpropertiesny.com.
Fabulous. Jeff, thank you so much. I do appreciate it.
Thanks, Sam. Have a good day.
You too.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much, and hope to catch you on the next episode.